So I just wanted to, I guess, start by setting the scene a little bit about this talk around blockchain. One of the things with blockchain is it's a really big environment and it's a lot to talk about. So to get through this, and I'm really looking forward to your questions and answers at the end of this session. A few days ago, I was lucky enough to go out to dinner with my family, and we went to a Chinese restaurant. And one of the things that I love about Chinese is that when you get to the end of the meal, and it was a great meal, and we were given the fortune cookies. And what was really amazing about the fortune cookie is and this was only a few days ago, and so I'm starting to think about my presentation today. And in the fortune cookie was something really, really interesting, and it said, "The man who waits till tomorrow misses the opportunity of today." And I really thought about that, and I thought, you know what, that's one of the key messages that I'd like to get across today is the opportunity around blockchain, and what does it mean, and is it real? One of the things that hopefully will come out of today's presentation is that blockchain is a real opportunity. It's something that's going to drive forward, and it's going to change the world in the same way that the internet was around many years ago when it first started. In fact, I looked at a YouTube video. Someone sent me an interesting clip the other day. It was a talk with NBC. It was a talkback show, and the guys were talking about this weird thing called the internet, and it was really interesting. If you go back and have a look at how the internet is described right back in the early stages, and they're like, "Oh, so I think it's this thing where universities get to talk to each other and all this kind of stuff." And it's really interesting. You kind of look back at that now and you go, huh? Wow, they don't really get it. So blockchain is in that similar situation where we've got a long way to go, but the opportunity and the value is definitely there. So one of the things around the missing the opportunities of today, my previous company, way back that I started in 2005, was a contact center technology company. And what that technology company did was it enabled telephone calls to be made through computers that were hosted in data centers. And during that time, I'll never forget, one of the most profound things happened during that, and it was in 2008 where my CEO, so there was 4 of us that started it, and I was one of the techies, so I didn't put my hand up for the CEO role. So he came back from a seminar, and in 2008 he came back and he said, they were talking about this weird thing called the cloud. And I nearly fell off my chair in laughter, because he said, I'm like, please don't let them call this thing the cloud, right? It's computers, they're in data centers, they're connected by wires. It's not a cloud. And he's like, that's what they were saying. And so, as the years kind of evolved, then the cloud opportunity started to come out, and we could see what the growth of that opportunity was. So in 2008, when this conversation happened, the cloud market was $5.8 billion, so tiny. In 2020, it's expected to be $159 billion. So simple example of the opportunity that, even though people don't understand it, and I remember back in those early days, 2008, 2009, sitting in front of companies saying, cloud computing is the way of the future. And even today, there's still companies that really are kind of battling with that, and we're so many years down the path. So it was just another example of the opportunity. So when you actually understand the opportunity, so for those that are in that opportunity world, so if you think about Microsoft with Azure, you think about Amazon with AWS, you think about all the big public cloud players, right? The ones that got in when it wasn't really that well understood, but they could see the opportunity. Not only could they see the opportunity, but they knew that it was something that was going to change the world and change the way that people use computers. So how many people believed it back in 2008, 2009? Not many, but those that did really made some good value out of it and made a lot of money out of it. So it's interesting that we talk about that, and it's $160 billion. So I'm going to give you another number. So 160 billion. Let's think about 1,000 billion being $1 trillion. So, and then triple that. So let's talk about $3 trillion. That's the estimated value that, according to Gartner Group, is the value that blockchain will create by the year 2030. Have a look at the scale of those graphs. So 2017, $4 billion. So in the same time frame, 13 years, we're going to go to $3 trillion. So if they get it right, wow, that's a big number. If they get it half right, that's still a big number. So it's an interesting growth curve, and I think the important thing around this is that blockchain is something that all the analysts in the market believe, and they can see it and they understand it as a future technology. So very important to understand that for not only for your own organisation, but to understand that those that do get it, and they may be competitors of your organisations or of your clients' organisations, then that's important to know because they could get disrupted very, very quickly and on a big scale. So the other thing to look at when we talk about emerging technologies is what are all the things that we can look at for evidence? What are the things that we can see? Okay, yeah, look, someone's just put a chart up. It says $3 trillion. Yeah, I could have drawn that up myself. So some of the things that we can look at are around the jobs. You know, how many jobs are being employed in this sector? If we have a look at another simple chart, it shows the blockchain-related jobs just being advertised. Now, what's important here is that it goes from 2016 to 2017 from 1,000 to 4,500. You think, well, that's still a low number, but it's the curve there. And that curve has got even steeper over the last 18 months, and there are now thousands and thousands of people working in the blockchain industry. And let me tell you from someone who runs a technology company that there's just not enough developers and people that are working in the blockchain community at the moment to really substantiate it, and we need more. You know, we're constantly talking to universities around, you know, what are the students, who are the students that are learning blockchain? We need more in this space because it's moving so fast that we're just not having enough resources to be able to supply that demand. Another interesting chart here is showing the amount of investment. So one of the other things that is important when it comes to understanding, well, is this real? Is this opportunity real? Is the growth of this actually going to happen? Let's have a look at this chart where we can see in the first half of 2018, just over $1.3 billion was invested by VCs into blockchain companies and blockchain projects. This doesn't include the initial coin offerings, the ICOs, you know, that has been in the media for the last 12 months. These are real projects with real companies and investment within enterprise clients as well. So there's a lot of money, and you can see that the steep curve there as well. Again, you know, by the time that the H2 numbers get released, I'm sure that we'll see at least a double of that number for this current 6 months. And so the investment in the opportunities, the people that we need for these opportunities, these are all growing. So these are all indicators that show, yes, we're going to make it, we're going places with this blockchain, but what does it all mean? So I'm going to start off with just kind of now just talking a little bit about what is blockchain, and then a little bit about the elements that make up blockchain. One of the things that's important around understanding the blockchain ecosystem is that the ecosystem, most of the elements of the ecosystem already exist, have existed for many, many years. And I'm going to show you some examples of how you've actually used the elements of blockchain over your lifetime and not even realized it. So first of all, I'm going to start off by talking about, first of all, what is blockchain? So one of the things that I guess to start with is what's the underlying technology around blockchain, and which is called a distributed ledger. So I'm assuming, given that this is an accounting event, that most people know what a ledger is. Does anyone not know what a ledger is? Okay, good. I'm in the right room. Okay, so the ledgers that we currently know quite often are what's called centralized. So that means that there's one data store, there's one place, one central store of the ledger. That could be a handwritten ledger, or it could be a computerized ledger that's stored on a database in one location. So that's a good example of what a centralized ledger is. Then we can move to what a decentralized model, where we start to split that up, and it might be that we have, for example, let's leverage cloud computing and make a little bit of redundancy in our network. So we can have a copy of our ledger in Sydney and a copy of our ledger in London and a copy of our ledger in Singapore. But let's keep it all synced up and backed up. That's an example of a decentralized ledger, but it's still one ledger. Then we move into the world of distributed ledger. So distributed ledger is a little bit different in that a distributed ledger is multiple ledgers that all are the single source of truth, and they all update each other. So it's still one ledger, but it's actually across multiple nodes, nodes being places where the ledger is stored, and the distribution of that actually locks in the what's called the consensus, right? So it actually says that this is all valid. Now, I'll give a simple example that kind of explains how a distributed ledger works and why it's so important around the consensus element. There's a kids game my kids love to play, which is, we're all sitting around the dinner table, and it's the first person starts off and they whisper something to the next person. And then they whisper something to the next person, and it goes all the way around. And the idea is when it gets to the final person, then that final person says it out loud. And does it match what the first person actually said, right? So it's this game that most people have played or would know about, and quite often it goes wrong. It's quite a fun game, because when it goes wrong, it can, you can end up with some funny kind of sayings, right? It's quite interesting. Now, what would happen if each person, as they took their turn, actually said it out loud, right? So have a think about that. So we're all sitting around the dinner table. Now this time, I'm going to say it to the next person, but I'm going to say it out loud so that everybody around the table can hear it. What's the difference? What are the chances of getting that wrong by the time it gets around the table? Pretty small, right? Why is that? Because every step along the way, everybody gets a copy of the same information. And that's the same mechanism of how a distributed ledger works. So everybody's agreeing that the information is correct along the way. So each time there's a transaction, we update the transaction. If everybody agrees with it, yes, that's correct, and we move on. So the next thing I want to talk about, which is an element around the ecosystem, is a thing called smart contracts. So smart contracts is a way that information is transacted on a blockchain. And one of the examples that I'm going to give now is around a smart contract that I'm sure most of the people in the room have used, and have used for many, many years. Okay? Has anybody not used a vending machine? Might be for a bottle of drink, might be for a coffee. Vending machines, let's have a think about how a vending machine works. So I walk up to the vending machine, and the first thing that I do is I put some money in the vending machine. Then the next thing I do, I select what I want. And then what happens? I click on a button, and then that processes the transaction. So there's a smart contract running inside the vending machine that says, if the value that is put into the machine equals the value of the product that I selected, then dispense the product. So what we've actually done there is, first of all, we've accepted some value. We've also got some other value from another place that we're going to transfer, and we actually do the transaction as part of that process. And so what a smart contract does is it actually does that as part of the blockchain ecosystem. So another good example of how a smart contract actually works. So it's actually taking pieces of data, can take in value, and it can hold that value and do something with that value. Another element of the blockchain ecosystem is tokenization. And all these terms and all these different phrases are important, because I'm going to give you some real-life examples, and I'm going to talk about these words, and so it'll be much easier to understand the concepts. So tokenization is used for, if I've got something and I want to provide everybody a piece of that, I can create tokens around that, and I can then give you all a piece. So again, tokenization is not actually something that's very new. So if you think about an event, think about a concert. If you've been to a concert or if you've been to a sporting event, right? There's one sporting event or there's one concert. Now, what do I want to do with that concert is I want to break down the value of that, and I want to share it with everybody so that anybody can come and actually be a piece of that. So the concept of tokenization has actually been around for a long time. It's called, and it's in that example is tickets, right? So I'm going to create 10,000 tickets, and if you hold one of those tickets, I'm going to sell you a ticket, and if you hold one of those tickets, you can then come and redeem that ticket and come and watch my show. Right? That's an example of tokenization. So you're taking one asset, one piece of value, and you're actually selling it off in pieces, and those pieces can then be used. So that is called, in blockchain world, utility token, right? Because I'm going to buy something, and then I'm going to trade it, and I'm going to use it for something. I'm going to get some value out of it. So that's an example of utility tokens. Then, when we trade tokens, there's a concept called tokenomics, which is the price and how much a thing's worth. This is really interesting because it also plays into the world of cryptocurrency, so things like Bitcoin. In tokenomics, another really good example, how we've used tokenomics for a long time, but no one really actually knows about it. So for tokenomics, as an example, these are some real live coupons that are available when you go to the Sydney Easter show. So each Easter, there's a show on in Sydney, and if you go to this show, and you can see the picture there of all the people having fun, the coupons or the rides, you can't actually use money. You can't go up there and give them $5 and go on a ride. You have to give them coupons. And how do I get these coupons? I have to go buy them, right? So I'm going to go buy some coupons. So what's interesting about this model is, if you have a look at those two pictures there, there's a purple one and an orange one. So one of the coupon models, pricing model, is $2 per coupon. The other pricing model is you can get 30 coupons for $50. So you're going to get a few extra coupons. They're not actually going to be $2 each. They're going to be a little bit less than $2 each. Now, that means that if I'm going to buy them one at a time, I'm going to pay more for them. You can also see in that purple one, it says rides attractions start from 2 to 4 coupons. So each time that I want to use my coupons, I'll go to the attraction that I want to use it for, and I'll find out, well, how many coupons do you want to take so that I can go on your ride? So that's important to know. So once I'm in that world, I've now got my tokens, and I've got, which is in the form of coupons, and I can go on all these rides. And I don't know how much they are until I get there, and they're going to be a certain price, but it's not going to be how many dollars is it, it's how many coupons. That's exactly the same idea as what tokenomics is all about, and how the pricing model can work and can differ for certain things. So the next part of what I want to talk about is around the different blockchain projects. So now that you have an understanding, now you're all experts in blockchain and the blockchain ecosystem. Everyone's happy now? We're all good, experts? Great. Okay, so now we're moving into let's go into some examples of how we can apply all these different things, but using real life blockchain projects. So I'm going to go in through a number of industries, and then I'm going to go deep dive into a couple of real examples of how these different methods are used in the real world. So some examples, and they can be used in multiple things. A lot of blockchain projects at the moment are things that are where we have multiple entities that need to trust each other along a path. So a good example is supply chain. So I want to know when something is created or grown, or when my cattle is turned into beef, I want to know along the way what's actually happened to it. So I can capture that, but each person along the chain, or along that value path, has to update some information. So we can all see the information and have access to it. So that's a really good use case for blockchain. Anything to do with food security is another really good use case. So finding out where things are allocated. So if I use a simple example around food security, and there's many examples of it, if you look up food security breaches, on Google, you'll find many examples where things have just gone wrong, and for no apparent reason, but we need to track where the food come from, or we need to track where the food actually is. And so blockchain's a really good use case for that, because you can automate a lot of those processes. The same thing happens around anything that is supply chain or anything where it's distributed value. So energy sector is another good example where we're seeing a lot of projects that are using blockchain to distribute and to understand where the electricity is coming from. So as we're moving from a more centralized electricity source to a decentralized electricity source, people can use their solar power from their home and connect it up to the grid. We want to know where does all that electricity come from, and how do I get green if I want green power and I don't want brown power, and all these kind of things. That all can get managed also by blockchain. So one of the examples that is very, very powerful is to use blockchain. One of the value adds of the distributed ledger is that it can't be modified. So when you have something that can't be modified, that means that if you can't change something, it's very hard to make something fraudulent. So one of the examples that I'm going to talk about now is how to leverage blockchain to fight against fraud. So this is a real life example. This is a project they're working on with a number of banks and payroll providers. There's a big challenge in the Australian market at the moment for mortgage lending, where there's a lot of what they call liar loans. So a liar loan is, so I walk into the bank and I say, hey, I earn $500,000 a year, and they go, okay, yep, you've been approved for a $2 million home, happy days. So I'm like, great, and then they say, okay, the only thing is you need to see your payslip. Yep, no problem. So I download a copy of my payslip, and I kind of get out Photoshop, and I make a few little changes, and I hand them my payslip. No problem. Let's move on. These types of things are a bit of a challenge when it comes to the financial industry, because no one wants to give money to someone that can't afford it. So this solution is designed to protect that industry around fraudulent activity. So on one side we have, let's start with the payroll services side. So one of the elements of this is that you've got to get the information at its source of truth, right? So when the payroll or the payslip is created, we need to capture it at that point. So what we do is we take that payslip, we put it through a process which turns that payslip into what we call a document fingerprint. So a document fingerprint is just a hash, which is a lot of numbers and letters that can't be reversed. So you can't take the hash and go, okay, let's see what it was, because it doesn't work like that. It's using some specialist cryptography to make sure that you can't go backwards. So let's take that hash of that information. So the only way that you can make that hash is if you had that information. So, and let's put that into a blockchain. Why would we put it into a blockchain? Main reason is because we know it can't be changed. So now that we've got this hash or this document fingerprint locked up in the blockchain, now we can validate that payslip at any point in the future. So on the other side, where you see the financial services, if I walk into the bank and now I'm going for my loan and I tell them I'm earning $5 million a year, and they say, yeah, it's great, show me your payslip, I give them the payslip, they put it through the same process. So what happens is that information is turned into a document fingerprint or a hash. Now we can check it against the blockchain. Does it exist? Yes or no? So if it exists, then that payslip information is valid or is true to the source of the information. So it becomes very important when it comes to knowing, is what I'm showing you right now actually the same information that was generated when it was first created? Now have a think about that. So if it comes back cross, well, that means, it might not mean I'm an actual fraudster, but if it comes back as a tick, then you're pretty much 100% guaranteed that that information is correct. And so that eliminates a lot of the challenges. Another use case for this similar model is another industry, totally different industry, but you can see how the blockchain starts to apply, is in the area of medicinal cannabis. So one of the challenges that they have in their industry is that if I'm going to sell a batch of medicinal cannabis, then it's all measured by the lab results. So, take a small sample, take it to the lab gives me a piece of paper that says, here's here's the results of your medicinal cannabis, and so based on that, we'll determine the value. So it's very, very important, because if I then sell it, I want to make sure that, or if I'm going to buy some as a in the medical world, they want to make sure that the value is actually correct. So using the same process at the labs, when they generate the lab report, we can do the similar process. And then at the pharmacy where they're going to sell, or where they're actually purchasing, they can do the same check. So they can take the lab results and they can check that the lab results that they've got in their hand are actually valid to the lab results that were created. So it's quite an interesting model around using blockchain to make sure that things are not fraudulent. So have a think about how that can be applied to the accounting industry. There's a lot of different applications around, why do we have auditing? We have auditing because we want to know, is what's happened actually true? So there's a lot of different use cases that can be used, not only for, for small business or for bookkeeping purposes, but right through, enterprise clients as well, around, the validity of information. Another example that is a very interesting one is around international commerce. So here we have an example where we're going to talk about actually the challenges and using blockchain for international commerce. And how can we get around the barriers and what are the challenges? So the first examples of this, or the first implementation of this, was with companies that have employees working in different countries, and they need to transfer some money around to make, for their salaries. So how this works is, if I use this example that's up on the screen, I'm an Australian company, and I've got employees in Malaysia, and I've got employees in Singapore. So what's my options? So one option is that I can transfer the money using the traditional bank system, and then transfer it to the other office, who can then pay the employees. When I do that, it takes a number of days for that money to appear at the other side. It's also can be quite costly in fees, but also in the differences between the FX exchange rate. So we want to eliminate some of those barriers, and we want to make it much more efficient. So using blockchain, what can we do? How do we use it to make this all happen? So using an internal blockchain for the company, what we can do is we can have what's called a wallet in each country that is the store of value for the local currency. So let's say I've got to pay my payroll in Malaysia, and I've got to pay my payroll in Singapore, and I'm in Australia. So I'm going to move money into my wallet, and I'm going to convert it to blockchain tokens. I'm going to then send those blockchain tokens using my blockchain to the other countries, and then when they get to the other countries, I'm then going to convert them into their local currency to be then distributed. So as a concept, it's like you're creating your own market, and you're creating your own internal currency that then enables the international trade to happen. So the money actually never leaves the country. So the way it's all set up is that each country has got some stores in their banks, and they're actually using the blockchain to create this distributed ledger around how we would transact the money and make sure that the money can be moved around, but money doesn't actually leave the shore. So there's no movement of international monies. It's just a way of providing international commerce without actually sending money overseas. So the next one, which is the most interesting of all, is around, and again I'm going to use this tokenization. Anyone remember tokenization? So the tokenization of real estate is another example. So this one is an example that has got many elements to it. And I was asked a question earlier in a session, so when it comes to blockchain, what does the government think? What's the government's role? And the answer to that is often it's around the regulation. So if we think about, if we use a use case of tokenization of real estate, the real estate has a land title, right? It has got a piece of paper that says who's got the ownership. So if we talk about tokenization, it means that I'm going to make lots of units that I can sell to someone, right? You can buy lots of pieces of this. And if I use an island as an example, so the island I'm going to sell, guys, you can buy tokens of these islands, and they're $10 each. You know, you can buy these tokens, and you can have a small piece, or you can buy hundreds of them if you want to, or you can buy thousands of them. But let's say there's 1 billion of them in total. So the role of the government is more around that regulation. So at the moment, how do we do that? So can we actually take an asset that is regulated and actually split it up? Can I take the lands titles piece of paper and rip it up into 1 billion pieces and give you a tiny little fragment that you might have to put under the microscope to read? It's not going to work that well. So we need to think about how that's all going to work. The answer to that is there's many different ways that this can be done, and there's some interesting challenges around that, but they're not insurmountable. So most of the governments, well, definitely the Australian government, is helping us with a number of projects around tokenisation, and we're working on this type of example where even to the level of, if I talk about the New South Wales government, that's the local state, we looking at being having digital lands titles by July 2019. So what does that mean? It means that we're moving one step closer. We don't have pieces of paper anymore. They're also experimenting with blockchain and how that would potentially work. So we're definitely moving on a path to make all these things happen. But if you think about what's the reality of tokenisation of real estate, well, if your clients have got investment portfolios, and those investment portfolios include land or property, think about what that can do for those clients, right? So you can not only buy, you don't have to buy one whole property, you don't have to buy, or if you think about an apartment block, you don't have to buy one apartment block, you can buy small pieces. So as a portfolio, I could potentially have small pieces of a much wider property network. So it starts to change things and starts to enable more things around the property investment space. And it's one that we're seeing more and more traction, and we're getting a number of projects, you know, in that space. And another example is, well, if you own the land, then what about all the regulations with that? So we're working on a project that is a platform to enable all the right tick boxes for the regulators. So the challenge with tokenisation of real estate is not what's called the primary market. The primary market means those first buyers. So if you all go, hey, guess what, Darren? I'm going to buy, I'm in, right? Okay, here's an application form. Fill this out, put this information in, let me know who you are. I want to make sure you're a real person, and you can buy my tokens. That bit is typically kind of okay. There's ways around that first piece, and that's the primary market. The challenge is the secondary market, because if you want to then start selling to somebody else that I don't know about, then how do I get information to them? How do we track that information? And so it's the secondary market that becomes the most important. So one of the platforms that we're working on at the moment is how do you capture that information? So if someone wants to sell their tokens to somebody else who's not registered, then they can do that because they can now have to be registered on this particular platform, and now they can transfer their tokens, and you can start this secondary market. And the secondary market can work across many different elements. There's some really interesting digital assets that are now being created as well, which are being traded and moved around. There's even one called Crypto Kitties. It's digital cats. Does anyone want a digital cat? So digital cats is just you go online and you can buy yourself a digital cat. You can have it, you can look at it, you can breed it, you can do lots of things with it, but it's all digital. But you can trade it, you can send it around. It's actually an asset. So the trading of assets in the digital world is no different to what we would do here. It's just that what we're doing is taking a physical asset and turning it and creating a digital ledger that can then be transferred around. And that's an important piece. So enough of me. So I want to move on to kind of the Q&A session. So I just want to thank you all for listening in, and we're going to start the questions now. But one of the things, just wanted to remind you of that lovely that cracker that I got with the man who waits till tomorrow misses the opportunities of today. So don't forget that. It's a very important one because the blockchain really is an opportunity, and I look forward to your questions.